This is the weekly chart on AMC, and this weekly seller's level at $13 has been a real pain in the butt for the bag holders of AMC. You can see it a little clearer on the daily chart, where price has attempted to climb not once but twice. And the fact that price could not even get to the bottom of the zone really tells me that this is a huge selling level and or zone. Now I still have a $5.50 target level, and based on the technicals suggest more downside risk, but when you look at the fundamentals, that also suggests downside risk. Let's look at this article. It is coming from Investor Place. So AMC stock is on the move after reaching its lowest level in 52 weeks. Indeed, fans of AMC stock have unfortunately had front row seats to the movie theaters company's stock slide over the past year. For example, on November 9th, the stock dropped 14%, and then a couple of days ago, the stock dropped 8%. So despite strong third quarter financial results, and this was a fluke or a one-time event in my opinion, due to a couple of the stellar movies that came out this past summer, a la Barbie. AMC seems to be suffering from the impact of recent writers and actors strikes. AMC announced better than expected profits and revenue numbers at its earnings call last Wednesday, but also warned investors that the ongoing strike would affect the company in 2024. Again, that's a sign that stock is heading lower. That said, just yesterday, B. Riley Securities lowered its projection for domestic box office revenue for the remainder of this year, next year, and then 2025, citing the damage already done by Hollywood strikes. Additionally, it seems investors are still perturbed by AMC's sale of up to $350 million in common shares announced earlier this month. AMC stock fell nearly 20% on November 9th when the company announced it will choose to sell off more of its ownership in order to combat its accumulated debt. And I don't really see anything changing. Yes, it's going to be a bit more interest rate friendly environment going into next year, but if you're not generating any revenue or profits, how are you going to pay down your debt? Well, you issue more stock, just like the U.S. Feds. The movie theater business generally is at something of a crossroads. While AMC certainly enjoyed a comeback this year, boosted by blockbusters like Barbie and Oppenheimer, in general, theaters have been long considered an industry destined to recede. So, this is a dying business model, and the proof is in the pudding in terms of the stock. Now, I did miss out on an opportunity to short it when they did the reverse stock split some months ago. I would not short now. We're near a bottom, but really the risk to reward is not the greatest, or reward to risk is not the greatest. So, nevertheless, I do think that the stock is at $7. It will go to $5.50 and potentially even sub 5. Thanks for watching. Subscribe. Please like the video.